What's going on, everyone? In today's video, we're going to be going over how to use the volume profile, and I'm going to be giving you guys some quick tips and tricks to use to optimize your trading. So to start off, what is the volume profile? The volume profile is basically the same thing as the volume you see on the bottom of your chart, just flipped over on its side so you can see the volume by price. So instead of seeing it with the actual bars, you're going to be seeing at exactly which price, what type of volume, and who's in control at each level. So this gives you a much more clear overview. Now, every broker should have one. If you're using Webull, Thinkorswim, most of them have it. The one I'm using right here is on TradingView, so this one is paid. So you guys could get this indicator for free if you really want to, if you do a little bit of digging. But this one I'm currently using on the chart is paid, so you guys might see a little bit of a difference from your broker to this one, and it's not really going to make a huge difference besides the aesthetic of it. So you're going to be seeing something similar to mine right now, where colors might be different, but here we can see red is for selling volume and green is for buying volume, and we have all of it just placed right here. So what I'm looking at right away is for any bars that stand out. So right here we can see this one, and this one are the ones that stand out the most right away. So what we can see here is this massive volume candle shows that we rejected here, right? So sellers are in control. So we're seeing here we have more sellers than we do buyers. And basically what we're looking for is zones where it stands out, and we look at what direction the price moved from there. So here we can see massive, selling, and even if we don't have the green or red bars, we can still see that there's a lot of volume there, and if it pushed downwards, that means that the sellers are in control in that zone. So what that means is basically, let's look over here. We see sellers, we got a massive dump right here, okay? And we saw a massive volume level. So this means that sellers are in control at this level because there's a massive move down, and we see a massive volume spike right there. So what happens here is I'm going to see a retracement back up to this level. So let's say price, decides to come back up to this level. I'm going to see it, and I'm going to take a put stop loss above the highs or anything like that. But whatever I'm doing, I'm basically just looking to play off of the rejection right there. Same goes right here. Price retraces back there. I'm going to play puts, or I'm going to go short, depending on if you're playing equity or options. But I'm going to look to go short in this zone right here off of that strong selling volume, and have my profit target and stop loss all set depending on your parameters. But the main thing is that you're going to be looking to play off of these strong selling zones. So it's just pretty simple to really go into actually what it does. But I do want to show you guys a little bit of an example of, besides from the strong volume bars. So we also see that we have a volume gap. So right here we see that there is much smaller volume, right? So we can see in this zone we're not going to really be seeing much happening, and it's usually periods of chop and weakness. So we see here, price retraces back into that zone, falls, retraces back, falls. So there's two ways to play these, and I usually avoid playing levels that have these volume gaps because they can be a bit confusing, but they work either way. So what you're going to do here is you can see there's two ways it works out. Either price busts completely through that zone. As you can see right here, we had a volume gap, price, boom, straight down, right? Or you're going to have something like price comes into the zone, rejects on all three candles, and we get a massive drop. So it can either be something like this right here where the massive candle fills the gap, or it's going to be something like this where it shows weakness and there's no breakouts or anything. Okay, so it can be either case, and you just have to be careful and kind of understand what you're really looking at there. So let me show you guys a better example. So also, I forgot to mention this earlier, there are two types of volume profiles that you can use. There is the fixed range and there is the visible range. So it's usually best to use the fixed range because it doesn't give you a bias. However, I do like to kind of use the visible range more, in my personal opinion. If you guys are using a fixed range, that's probably going to be better for your trading than a visible range. So that one's totally up to you guys. Play around a bit and see what works best, but I like using visible range. So what the difference is, visible range, you see I zoom out a bit, the actual volume profile changes. On the fixed range, it's not going to change. So it's just going to stay the same way. But if on this, if I zoom out all the way over here, it will show me different volume profiles, and with the fixed range, it will do nothing. Okay. So again, we're going to look at another example. Here we see price consolidates, and then we get a massive push up, and we see most of the volume is right here. So price pushes up, and we wait for a retracement back near this zone right here. Okay, so what happens? Price retraces back right into that zone here, and we get a nice bounce so far. So we can see that this area is where we got the consolidation, this entire range right here, where the most of the volume is located at, and that's where we look to take our trade. So this is just going to be more of a confirmation tool, so you're not going to just solely enter once it hits like the volume area, because there's two things you want to consider. First off is that volume changes. Maybe if it worked right here, it wouldn't work later. So you do need to see some confirmation. This would be kind of confirmation for me to see. Maybe I would give one more test and then take the trade, but that also depends on what you like to use most. So that's just that's another example right there. Again, if you're going to be playing shorting, you can still see that same range I was talking about earlier. You can see massive supply, massive push down, comes to massive buying volume, and we bounce right back up. So this volume is one of the key trading principles, and you can use it on pretty much any market. I believe you can use on 90% of tickers. If you're playing penny stocks, however, not all of them will have that historical data on it. So it's going to be, let's say, a lot of periods of chop, and then it's going to be a big 50% jump, 60% jump. You're not going to be able to use it too much, but you will still get the chance to use it on the intraday period. So on something like SPY and all those other indexes, you're going to be able to have much more liquidity and much more movement, so you can actually see these dating back to other days. So that's what I love to use most about this. Yeah, so that's pretty much it. You're just going to have to map out on different time frames, different levels, and see what works best, and kind of be a little bit intuitive, because you don't want to just buy right as it comes down to the level, because you're going to get burned if you keep doing that. But use your intuitiveness a little bit and see at what level you can see the most buying or selling at, and take your position based off that. So hope you guys enjoyed the video. I will be back with another one going over volume profile again next week. So if you guys want to see any other videos, make sure to leave them down in the comments below, and I'll make them for you guys next week. All right, see you guys next time.